Hello, Business 635, Managing Financial Resources. It is week 3 of our program. This is Professor Hassey reporting as usual live from the Finance Central in Claremont, California of this week number 3 of Business 635. Our topic this week is financial statement analysis. You have your first case study this week, which is basically a 2-week project to look at and review a financial analysis of a real-world corporation. And I'll talk about that in just a few minutes. Everybody has completed their discussion posts, their second discussion posts. I'm in the process today of grading them, and I will post those grades no later than tomorrow, Tuesday, so you can see how you did and your comments. But I appreciated all the additional comments you all made to your fellow colleagues, your students, and it proved a lot of worthwhile reading. So thank you very much for that. This week we're going to be concentrating on financial statement analysis. But before we get to that, in Blackboard this week, week number 3, here's your Blackboard site for our class. Here's week number 3. In week number 3, under Review File, there's my introduction, by the way, there is a file called Week 3 Class Review. This is that file, and I want to talk a little about it today because it will help you a little bit in your casework of this week, but also it pretty well summarizes the discussions of last week, week 2, and financial statement analysis. So I want you to spend a few days this week going through this file, make sure you understand it. It's also talked about, and these topics are talked about in your text and in my notes in Blackboard. First off is this slide from this spreadsheet talking about Chapter 6 and risk. The capital asset pricing model, which is a way of determining equity risk and a way of determining expected return for a stock. We are to be familiar with this capital asset pricing model. Most of you probably are. Also, the concept of debt risk, how debt can change over time due to the tax rate, due to the current interest rate on money. For example, capital asset pricing model. It's the risk-free rate, which is 1.75% currently, approximately. The stock market average return, this is the average return of the S&P 500 currently, 9.75%. Notice the risk-free rate has no risk, thus a 0 beta. Remember, beta is the statistical calculation of regression standard deviation analysis. Thank God we don't have to calculate it here. To determine the relationship of the return of a particular entity to the average of the market. The risk-free rate has a beta of 0. There's no difference. The market return rate has a beta, which is the average beta of return, 1.0. And then I selected the beta of Apple Computer, 1.11. That's the risk of Apple Computer these days. Well, if I wanted to determine, if I wanted to buy Apple stock and what would be my expected return based on the market today, I could use the capital asset pricing model, which takes the risk-free rate, adds it to what is called the market premium, which is the market return rate minus the risk-free rate, and then you multiply that amount times the particular beta of the company you're looking at. In this case, it's Apple. So if I take 1.75 plus 8%, the market premium, times 1.11, I get 10.63%. 10.63% is basically per the market. Right now, that's what I expect over the next year to earn off Apple stock. Now, if Apple proceeds to do that in their financials over the next year, I'll be happy. If not, if they perform less than that via their financials, I might want to sell the stock. But this is based on the risk in the market and the other market returns in risk-free rate, which is credit, and the market return of the overall stock market. Capital asset pricing model, a very important number for finance students to be aware of. Then we talk about debt, the cost of debt, the true cost of debt. Let's say I have a loan at 7% and my company has a 20% tax rate. Yes, I'm paying 7% for my debt, writing checks for interest, but I get a tax deduction. Interest expense is deductible for corporations, and I'm in the 20% tax range. So because of that, my true cost of debt is 5.6%, which is the cost of the debt, 7%, times 1 minus the tax rate. Tax rate is 20%. 80% of 7% is 5.60%. That's an important number too, because debt is a lot cheaper than equity. That's why a lot of companies borrow money. Debt is tax deductible. Issuing stock is not. These are two concepts that we'll be talking about in the next coming weeks, especially next week in Chapter 9, talking about the cost of money, equity, and debt. The second tab here gives you the financial statement of a company for 2018 and 2019. And this what concerns ourselves with Chapter 3. It's the financial statement analysis of this work is what the following tabs are. Cash flow statement, free cash flow, statement analysis. The statement analysis section has a lot to do with your casework this week. And the AFN or additional funds needed analysis, that is Chapter 12. Statement analysis is from Chapter 3. AFN analysis is from Chapter 12. What I'd like you to do this week, and I'll be talking about this in my video on Wednesday, at my midweek video in our class this week, is explaining the work in these tabs. But pay attention, maybe have a chance to go through this and take a look at it before my update video in the week. Also, this has to do, again, with your casework. And speaking of your casework, here it is. This is a project or a case paper that's due not until Saturday, October 19th. So today is October 7th, so you basically have almost 2 weeks to prepare this work. It is a 10-page maximum financial analysis of a company that you choose from the list of the companies I give you. It's an APA format paper. So what you need to do is select one of these companies. Just one. Once you select that company, you are to prepare a financial statement analysis of that company in 3 different areas. One area is you pick a particular statement to concentrate on. Income statement, balance sheet, statement of cash flow, and why do you pick this statement? Then you do a ratio analysis over a 3-year period. That's 3 years, where your source of information will be the 10K filings of the company. If you don't know what a 10K filing is, that's for you to find out, and I will explain that further in my Wednesday video. But then you are to compare and do a trend analysis of these key indicators. Your job is to select the key indicators from the financial statement analysis data in Chapter 3. Page 105 gives you a nice summary of those indicators, and I need you to select these and do a trend analysis of this company. Also, you are to recommend a conclusion. The student will then present an overall conclusion based solely on the overall financial performance presented, on the strength of the company. Do you recommend to sell, to hold, or buy the stock in this company based on your analysis? Here's an outline of what I'll be looking for. Give me a brief introduction and a brief history of the company you selected. Where is the company headquartered? What year did they begin? Tell me a little bit about the products they produce, and so on. Then select a financial statement that you determine as a key indicator of the company. It could be one of these 3. Do a ratio analysis by class, liquidity, leverage, efficiency, profitability, all discussed in Chapter 3 of your text. Ratio analysis. And then come to a conclusion based on what you think should you recommend this company to buy, sell, or hold stock. Here's the format. APA format. Time Roman 12 font, double space, 10-page maximum. The APA format includes a title page, an abstract page, and a reference page. What is an abstract page? An abstract page is your introduction. What are you going to be trying to do in this paper? What is your conclusion? What is the information that subsequently you're going to give in this paper to get to that conclusion? An abstract. Many of you have done an APA format paper before. So this is what I want you to do for case 1, not due until October 19th. So you got plenty of time to do it, plenty of time to research, select your company, find its last 3 10Ks. And also, if some of you are having a difficult time finding the information, in my Wednesday video, I will show you how to use our library databases, if you do not already know that, to find this data. The library database I choose to use is under Finance, DNB Hoover Database. Dun & Bradstreet, Hoover Database. That's a database where all this data can be found. If not, you can go directly to the company website and get their 10K information. More on that later on this week. You have your task. You have the class review file that I just showed you, the spreadsheet file to look over. And we'll talk more about that this week. And you have a case, but again, it's not due until October 19th. All right, everybody, I'll talk to you later this week. Any questions or comments, let me know. I'll be grading and posting your grades for the discussion post within the next 24 hours. Have a good week. We'll talk to you soon. This is Professor Hassey. Until next time.